looking at our top 10, there are a number of stocks where we have high conviction. Most of those stocks take, to be honest, several years to get to be in our top 10, to get to be very sizable positions within the portfolio, but not all. A recent example is one of our holdings, Ashtead Technologies. This company only floated in December 2021, so is really, as far as we're concerned, very much a relative newcomer to the market. But from the first month, it has only surprised on the upside. That's in terms of the numbers it's produced, the very strong margins, and indeed some recent acquisitions. So Ashtead Technologies is a rental company focused on subsea. It's based up in Scotland, but is actually a global company, and the focus is on subsea, as I said. So this is not only oil and gas, but also renewables. And slowly but surely, as the renewables market grows globally, so the company is growing more and more in that space.
Conviction in our holdings comes from the company's track record. If a company is consistently meeting and beating market expectations, that will lead to an increased confidence in that company's ability to generate future growth and meet market expectations, and will lead it to becoming a larger part of the portfolio. That said, we strive to avoid complacency, and we'll always focus on the company's numbers that they're producing in the market rather than the narrative that we're hearing from management teams. A good example of this is Alpha Group International, which is an FX risk management company and provider of alternative banking solutions to corporates globally. They've increased their revenue per client fivefold over the last 10 years, grown their client base and taken market share from the legacy players. They've expanded internationally, all driven by client demand, but they've done this by consistently beating market expectations. As a result, the share price has increased significantly over this period, and it's become one of the largest holdings in the portfolio as a result.
Our investment trust has a long-term track record of outperformance. Indeed, according to the AIC, it is one of only 28 invested companies where, if you'd invested your annual allowance since the start of ISAs, which I believe was 1999, if you'd invested that annual allowance every year and reinvested your dividends, as of March 2023, you would have a tax-free sum of £1 million.
I think there are two key features that I would highlight have driven the long-term outperformance. Firstly, the stable and consistent nature of both the investment approach and the team running JMI. That has driven long-term outperformance by focusing on the factors that drive share prices over the medium and long term, rather than being influenced by short-term market sentiment swings. Secondly, the infrastructure and support network of JPMorgan Asset Management, which provides us with the right technology, systems and people with which to execute our roles successfully.
There is so much information out there in the market, both via analysts, via the internet, via companies themselves, and this allows us to pinpoint at any one time the companies that we should be looking at to add to our portfolio.
I think it's fair to say smaller companies are riskier than large cap companies, but with that comes much higher potential reward over the longer term. We've got numerous examples in the portfolio of companies who have seen their share price go up multiple times. That is much harder to find in the large cap space. It's clearly much more difficult to grow from a larger base. In terms of mitigating some of that risk, we undertake deep and regular analysis across our companies in the portfolio and those in the index, and focus on the key measures that matter, staying disciplined to our investment framework, and also having a robust risk control infrastructure around us as part of a long-established investment house.